Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and today I have Zach McClure, and he is from TokenTax, and I'm going to let him tell you all a little bit about how his software works, or his platform, and it is TokenTax.io. Is that correct, Zach?
It's TokenTax.co.
.co, I'm sorry.
Yeah, or
okay.
TokenTax.us. Yeah.
Okay, well then I'm going to let you have the reins here, Zach, and give a brief intro, who you are and where you're from and what you're doing.
Well, thank you, and thank you for having me on. Excited to give a little basic crypto tax knowledge. So yeah, first of all, I got involved in accounting a few years back with a degree in accounting and finance, and then had a pretty eclectic career path, investment banking, Teach for America, all the way up until getting involved in crypto when I was working in impact investing back in 2013. And in 2017, we realized there was a really big need for crypto tax software that could figure out what's going on with this huge rise up in prices from 1,000 to 19,000. So we kind of made a new innovation in crypto tax software where we let people track their specific lots, their specific tax lots, and figured out different accounting methods they could use. And so myself, my co-founder Alex, we launched TokenTax in 2017 as part of the Product Hunt Google Global Hackathon, and ended up winning first place there out of 800 or 900 startups. And with that money, we just bootstrapped, hired our first engineers, hired our first accountants, and now we've got about 15,000 users. We've got a staff of 20 here ready to help with all your crypto tax needs, including CPAs and attorneys in-house who can file full tax returns for individuals, hedge funds, businesses. But our bread and butter is still this software, and still working with individuals who just traded in crypto, invested in crypto, and need help now doing their crypto taxes. So I'm happy to answer any questions you have today, share some basics about crypto tax, and then if anyone has any follow-up questions, they can always come to our website, again, TokenTax.co or TokenTax.com, and they can chat with us via intercom, which is on the bottom right of the screen of every page we have.
All right.
Perfect. So let me show a little bit about our website here.
I think you're muted now.
Oh, sorry about that. This is what our main tax dashboard will look like.
Okay.
And basically the way it works, let me just give you a quick tutorial. You go to import data here. Whatever exchanges you use, we support like over 400 exchanges. Basically every single exchange out there, we can get your data in. Even some exchanges that don't have outputs or API keys or CSVs, we let you copy it out of the browser, paste it into an Excel template, and even that imports automatically. And kind of what's unique about TokenTax is we have accountants here, basically, in your software, so to speak, that get your uploads. And if it's not formatted correctly, or if there's problems, or if you're not that good at Excel, we take the data that you put in, we fix the formatting, we make sure that it actually means what you said it meant, and then we get it into your account and calculate your gains and losses. But
so if you're like me, and you barely figure out how to get this CSV file, and you
exactly.
upload it and you did it wrong, you guys will help figure that out. That's great for people like me.
Yeah, exactly. I mean, you basically needed to be an Excel wizard and a CPA to get your crypto taxes right with some of the original platforms that existed back. And that's why when I met Alex, I was like, there's such a big need in this space. Let's make one that's really user-friendly for people that just aren't that good at Excel, or just don't have accounting backgrounds, to try to get this in. And you just do a quick and then you just OAuth in, Coinbase device account.
Don't you hate it when that happens?
So now, you know, every time, hopefully you can see again. So I've added in my Coinbase data. I did OAuth. So basically you can add all these exchanges, add your Abra, add your Binance, Bittrex, your Ethereum mining. You might have staking. You might have Ripple inflation, Stellar Lumens inflation tokens. You know, Ripple Foundation made grants. You might have Ripple grant income. So we can process all these different types of cryptocurrency income, get it into your account, and then you can generate a number of tax forms. So your form 8949, that's your gains and losses. We make it in several formats, so your accountant can do whatever tax software he's doing, or if you have TurboTax, we integrate with them. So you just make a TurboTax CSV and drag and drop it in there. Or like I said, we have CPAs in-house who file for you. Same with TaxAct, same with H&R Block. And then we also have FBARs. So if you had over $10,000 in any foreign account, like Binance, you probably need to file an FBAR. And then a FATCA is the IRS equivalent of that. FBARs for FinCEN, not to go too in the weeds. We also make casualty and loss reports, charitable deduction reports, missing cost basis reports to help you find gaps, mining and income reports. We can also do like-kind exchange, which we want to have a conversation with people before they do that. But basically, that's a way to claim deferred taxes when you trade crypto to crypto. And that way, you can defer some of your gains into the future. But again, that's a little bit more of an aggressive tax treatment. So let me just share a few slides, Di, if you don't mind.
Okay.
Be glad to do that. Okay. So first off, and apologies if this is a little basic, but you guys will notice this year, the first question on the IRS 1040, the Schedule 1, like the main IRS tax form, is have you transacted in crypto at all? Have you sold crypto? Have you received any? And so if you've done any of those things in this question, which is written quite broad, you need to check yes. And then from there, you'll need to fill in different schedules, different tax forms on your tax return. And again, we do all this for you, depending on what type of crypto activity you've done, whether it's mining, whether it's staking. So first things first, if you ever sold crypto for anything, it's taxable. If you sold it for dollars or euros or yen, that, you know, any fiat currency, as we say, that's the first one here, that's taxable.
Right.
If you traded crypto for crypto, unfortunately, it's taxable. You know, we get this question every day, 5 times a day. Yes, crypto to crypto trades are taxable. Now, there used to be something called like-kind exchange, where you traded one property for another property in kind, which is basically designed for real estate transactions. Like if you have an investment property in Hawaii, you sell it at a big gain, and then you roll all that money into an investment property in Colorado. That is deferred. That taxable gain is deferred. And so people tried to use that argument for cryptocurrency all the way through the end of 2017, when the IRS clarified, hey, this is only for real property, as in real estate. But that being said, some people have tried that in the past. So those of you who, you know, haven't filed your crypto taxes back to 2015, 16, 17, which don't feel bad, we see this every day, that could be an option for you through the end of 2017. Especially useful for people that made a lot of money in 2017 and then lost it all in 2018, and those losses don't carry back. You know, it's a very common thing. People put $10,000 in 2017. They traded a lot, got it up to 100,000, you know, bought some Ripple, bought some Ethereum, and then they traded all that at the peak into a bunch of other altcoins and ended up losing most of their money. So they went from, say, 10,000 to 100,000 back down to 10,000. You think they don't owe any taxes, but actually what happens is they had that $90,000 gain in 2017. They owe taxes on all of that. So they owe, you know, the IRS in their state 40,000, and that loss, they just have to keep rolling forward, blocking income for $3K per year and blocking any future capital gains. So for those people, like-kind exchange is especially useful. And we can talk about that more later if you have other questions. But jumping on to number 3 here, if you spent crypto for goods or services, it's taxable. If you paid your accountant in Bitcoin, if you bought coffee with Bitcoin, if you sent someone money for a subscription to their YouTube channel or to support them on Patronus or whatever, that is a taxable event. It's the same as if you sold it for dollars. And we will help you figure out exactly what the crypto is worth when you did that. And same if you paid an employee in crypto or anything like that. Now, other things that need to be reported as other income or ordinary income include mining crypto. So if you were mining crypto when you received it, that's income. And you need to report that in US dollar terms. Now, you can offset all that income with your expenses, like the miners you bought, the electricity, the fans you might have bought to do that. And we can talk a lot about that. That's another scenario where people ended up basically insolvent because they didn't understand what they were doing, and they mined a bunch of crypto at high prices, didn't sell it, and let it drop in value. So let's say they mined Ethereum throughout 2017. All the Ethereum they got was worth $30,000. Then when they went to sell it 10 months later, it's only worth $5,000. And meanwhile, they still owe taxes on all the mining income. So they owe $10,000 in taxes. All the crypto they got is only worth $5,000. It's a pretty crazy situation.
That is a crazy situation.
Wow. Yeah, and so there's an IRS summit coming up next month, and we're hoping to talk about issues like this. Hopefully, some type of amnesty. But we do have a number of clients who we're helping advocate for and say, hey, look, the economic reality is this person didn't make any money in crypto. In fact, they lost money, and now they owe you more on top of that. So can we work something out? But yeah, it's just so important to understand what you're doing in real time while you're mining crypto, while you're making staking income, while you're trading crypto and making big gains. Set some aside for taxes, and not in crypto, but in dollars, so that you're not exposed to dropping crypto prices. I just can't stress it enough how harmed some of these people's lives are, because they just didn't realize, especially young college students, and they just got way in over their head. They had never done their taxes before. And the last thing here is that if you were paid in crypto, that needs to be reported as income at the time of receipt. A lot of people did marketing for different crypto projects, different ICOs. They got tokens maybe before they were launched. So we'll help you figure out what the US dollar value of those tokens was. And we can kind of argue if there was no public value, maybe it wasn't worth quite as much as what it was when it launched. There's a lot of different things. And again, one last word of caution, people were getting paid in tokens for marketing work. Let's say they got OMG token at $1 each, according to OMG Foundation. Then when they went to sell it, it's only worth 20 cents, but they have this massive amount of income because it got recorded on the project books when they received the tokens. And so now they have to argue to the IRS, hey, it wasn't worth that much when I got it because I couldn't just sell it. And people have these problems a lot with the illiquid tokens. Let me pause there if you have any questions, Di.
Sounds to me like this area is going to just grow and grow and grow. There's a whole industry being born out of this.
There's a lot of unraveling that needs to get done. And, I would say that the crazy thing is how difficult it is. Let me jump here. The exchanges aren't even getting standardized reporting. Like, all of this would be hard enough just because of what I'm talking about. Even if all the exchanges gave us really easy to use data, they issued what's called 1099-Bs that show your cost basis and your gains and losses when you sell the crypto. None of them do that, basically. And so we're already unraveling, spending all of our time just getting the data right, let alone unwinding these problems for people who ended up owing a lot of money that they didn't have and things like that. But at the end of the day, I can say an ounce of prevention saves a pound of cure. And we have, let me just show you one other tool we have here. It included in your account at TokenTax is this tax loss harvesting tool. So basically, you can take all of your holdings and it splits it into whatever crypto you own that you hold at a loss, and whatever crypto you hold that you hold at a gain, an unrealized gain. And that way you can see what your taxes are through like year to date in 2020. You can see, all right, I've got a $10,000 gain already. Let me take a look at my holdings and then go to sell them to wipe out those gains before the end of the year. So you don't get yourself in this situation where you owe a lot in taxes and then have a big loss the next year. Let me just I'll pop back to this in a second.
The computers don't want to cooperate all the time, do they?
Yeah, this has a lot of different tokens. But basically, so you can see, all right, Cardano, ADA. I've got 10,000 of them that I hold at a long-term unrealized loss. That means basically, and I can just go down the list. I've got Bitcoin Cash, Atom, So all these things combined, I've got 77,000 of unrealized losses. This is very, very common, Di, because what happens is people bought these altcoins at high prices. They basically went to zero. And what individuals don't understand is the IRS doesn't give you any credit for that loss until you sell it. In the world of the IRS, in taxes, you have to realize that loss. And so a lot of people are like, well, it's basically worthless. You know, I paid $890 for it. Now it's worth $46, as you can see here. Well, the answer is if you don't sell that, this $844 loss never shows up on your tax return. And so this is why so many people come to us and they're like, well, I lost money in crypto for sure. I put in 5,000. Now all my crypto is only worth 1,000. They put in all their data and it's like, actually you had a $2,000 gain last year, and they're just flabbergasted. And it's like, well, you did make some money on some things. You sold those things, and then you bought other things that you lost money on and you never sold them. So that's why we made this tool for people. When we first started this in 2017, we had to make special spreadsheets to just do these sessions one-on-one. Like, hey, all right, let's take a look. Oh, you hold a lot of Bitcoin at a big gain. You have 10.34 at a long. Let's see how much Bitcoin you hold at a loss. Let's go sell some of that instead, but save all this Bitcoin right here. Basically what this means is do not sell these 12.9 Bitcoin because you hold them at a massive gain. So if someone's sitting there with like 20 Bitcoin, they need to pay their taxes. They need to know how many they can sell without triggering more gains. So that's just an example of some of the tools that we have. And we can talk about that more later if anyone has questions. But just jumping back to let me pause there and see if you have any questions, Dyer. Should I just go on with the basics?
I am fascinated by the whole thing. The thing with me is that these I've never been much of a seller, but especially just because I have a background in business and finance and all, I kind of was very scared to ever sell anything when I had made any money in this game. So I haven't really, I've been one of those guys who has been very careful about that, but I know most people are not.
I mean, that's amazing. And a lot of it is, you know, it's the smartest thing you can do in many cases. You know, here's a really good example with Bitcoin and Ethereum in 2017. People wanted to sell it to buy these altcoins, and they're like, I know it's going to rocket up. But what they didn't get is they literally needed to do twice as well on the altcoins just to break even when you factor in the taxes. Like, let me give you an example. You buy one Ethereum for $10. It rocketed up to $1,000. Now you basically got $1,000 gain right there. Now, if you want to sell that and put it into another altcoin, you instantly have a short-term capital gain of $1,000, and you're going to owe like 40% taxes on that, because that's how high short-term capital gains are taxed at, maybe 50% depending on your income. So whatever you buy has to do twice as well as the Ethereum. And you know, that's just something that people don't understand about trading a lot.
Let me ask you a very specific question. Let's say that I have 10,000, that I had 10,000 XRP that I bought at $1 and it went up to $10, and I sold that. What is the average tax rate? What is, I mean, you know, I won't quote you on this, but what is the average tax rate on a short-term gain on something like that? Is that 20, 30%? What are we talking about?
It depends where you live, but basically, if your income is about 50K in the US, we're talking about 25% tax. Now,
okay,
if
let
your
me
income
ask you.
is 200K,
go ahead.
we're talking about 40% tax, 50%
okay.
tax.
Well, let me ask you this. If I bought that same 10,000 XRP inside of a Roth IRA and did the same transaction, sold it, and then I withdrew out of that Roth IRA early, and I'm only being penalized 10% on that Roth IRA, am I wrong?
Yeah, and in fact, you can almost certainly get that 10% mitigate. So for one, a Roth IRA, you put that capital in, you've already paid taxes in, like, before you put the money in. Now any gains aren't taxed. So long story short, if your asset goes up a huge amount, that's the perfect asset to have in a Roth IRA. And I will caution this by saying risky assets are sometimes not the best to put in an IRA because because if you have losses, you can't mitigate them. But if you're confident, if it's a long-term investment, and crypto has been one of the best performing assets in the last several years, people that did it in a Roth IRA have done really well. But I will say the 10% penalty you can actually get that waived for many reasons, including any medical bill for you or a family member, any education bill for you or a family member,
Wow.
any hardship related to a natural disaster. There are quite a few ways to get that 10% penalty mitigated as well. So all that to say, just another reason why people should be maxing out their IRAs and retirement accounts every year. And
Yes.
you know, Roth IRAs can only be done if you have under a certain income level. But if you're in that range, absolutely, you should be maxing that out every year. It's the best kind of investment, other than HSAs, if you guys know what those are. If you have a high deductible healthcare account, you could do what's called an HSA. It's like a Roth IRA, except you don't even have to pay taxes on the money you put in before you put it in. It's the only one that's no taxes before you put it in and no taxes when you take it out. So
Right.
HSA,
The reason I had, yeah, go ahead. No, the reason I had brought up that Roth IRA question, because I had just opened one of the Roth IRAs with iTrustCapital, and so I was very excited about the idea that I've got an XRP investment that I potentially don't have to pay any taxes on, or I don't, as long as I don't withdraw early. That's pretty extraordinary to me.
Yeah, I mean, if you know, retirement accounts are one of the only free lunches in investing. It's tracking your tax lots. It's diversification a little bit. You know, you don't want to put all your eggs in one basket. But yeah, IRAs are one of the best ways to get tax advantages of investing. And like you, I also have seen iTrustCapital, and you know, of all the providers of Bitcoin IRAs and crypto related IRAs, they certainly seem to do the best job and have the most reasonable fees and good people working there. Let me jump on to some common questions and misconceptions we have, if you think that's a good idea.
Sure.
Okay, so a lot of people show up on our website or on our webinars and say, hey, I only bought crypto on Coinbase and Binance, so pretty sure I didn't actually do anything that needs to be reported. And you know, basically, the reason why this is just a total misconception is that Binance, especially before this year, they didn't allow fiat to dollar trades. So yeah, if you only bought Bitcoin and Ethereum or whatever on Coinbase and you never sold anything, then yeah, you might not have to report anything on your taxes. But as soon as you sent money to Binance and started trading on Binance, which only had crypto to crypto trades, you 100% had taxable events that you needed to report. So that's just a really common thing that people don't realize, that, you know, trading crypto to crypto, that is a sale of crypto and a buy of crypto. You know, you got to split the transaction in half in your mind and understand it's both a sale and a buy. If that helps make it more clear to people why crypto to crypto trades are taxable. And then another thing we hear is, like I said, the like kind exchange. A lot of people say, in 2017, I did like kind, so I didn't have to put anything on my tax return about crypto. And what they don't understand is that like kind exchange is a special tax form. It's not like you just do that and then you don't say anything. You actually have to report every single transaction anyway. Just like I said, you know, your sale of your home in Hawaii, God willing someday, and for your other vacation home in Colorado, you have to report that on your tax return. In the exact same way, you need to report all your crypto to crypto trades if you're going to try to claim like kind. And again, this is a good, you know, this is something that people who made a lot of money in 2017 doing crypto to crypto trades and then lost a lot in 2018 have considered, because it defers those gains in 2017 into the future.
Right.
And then, like I said, there's crazy data issues. You know, our first hire here at TokenTax was someone I had worked with before, who I had trained very extensively in Excel. Basically, data wizard, degree in accounting, just really, really good at building Excel macros, financial modeling, building Excel formulas to take crazy garbage data outputs from every exchange. Especially margin data is really hard to deal with. And, you know, him and I were working together to build templates to get this data into crypto tax systems. And now our engineers have automated a lot of that. And that's why TokenTax is so easy to use now, where basically you just follow the steps, click this link, download this form, drag and drop it here, and voila, your data appears. But several years ago, there was a lot of work that went into making tools that grab that data and convert it correctly And what I think you see is that there are a lot of other platforms coming out now, but they haven't gone through the fires of all these random data sets from all these random exchanges and figuring out how to actually get it in the system the right way. So people with complicated data or margin data, we really specialize in those cases. Or people who have struggled on other platforms, or their accountant is struggling to do it for themselves in Excel. We really specialize in these complicated data situations where you need a CPA or something to help you understand what's going on. And like I said, we also have a lot of people who lost their data, like Cryptopia. They had data there, they never got out, or their account got hacked at Binance, or they lost their data from somewhere. Or they had Mt. Gox Bitcoin and they never got their data, even though they got the Bitcoin out. And what we do is recreate that in a conservative way. So we'll say, all right, well, we know you bought these 30 Bitcoin on Mt. Gox at some point in 2013 when it was open. So what we're going to do is look at all the prices of Bitcoin that whole year. What's the lowest price? All right, $311. All right, so we know no matter what, you had to have paid at least $311. And so then we'll put that in the tax return, and that's better than putting zero, and getting no credit for it. And then, if the client gets audited by the IRS, so the IRS digs deeper, and they say, wait, how do you know this person paid $311? Give us more information. We'll say, well, you could go search the blockchain, find all their buys, but in the end, you're just going to owe our client money because we've already used the most conservative price we could. And that's kind of what we do in recreating lost data, because you need to give the IRS the data in as good of a format and as complete as possible. And so those specialized cases are especially difficult to deal with if you're just an individual investor. And so we kind of pride ourselves on being able to handle those. So
well, I think you just hit on something that I think is part of the reason a lot of people are very confused about the taxation of all this. For about 10 years now, everyone that has heard crypto has been told, oh, well, that's just for money laundering. That's for criminals. These are guys that are trying to hide their money. And the truth is that the exact opposite is true. This is the most trackable money that there is. It's more trackable than cash. In fact, I believe that that's why it was designed. Whoever created this, I've always had a hunch that it was somebody who wanted to be able to track the money. You know what I mean?
Yeah, I mean, common sense absolutely indicates that. And yeah, just last night I was playing bridge with a couple TV personalities, but quite a bit older and libertarian types, and they're just like, you do crypto taxes? Oh, interesting. I thought that's like an oxymoron. That's like everyone at that game made the same joke. That's what I get for playing bridge with some 70-year-old TV commentators. But basically, I agree that couldn't be farther from the truth. Almost everyone I've encountered in the crypto space has just been honest, wants to pay their taxes. We all hate paying taxes, but it's a necessary thing. If you made a lot of money, you just want to do it right. You don't want to play games with the IRS on that. And it's much, much more trackable than cash. That's the thing that's mind-boggling to me about people saying, oh, so you're helping people hide their money or whatever. No, it's like, no, everything that's ever happened is recorded on the blockchain. So in fact, it's way harder to commit any type of fraud or money laundering with crypto than with cash. And
exactly.
And so we're just trying to make it as easy as possible. Like, there were millions of people out there wanting to pay their crypto taxes and not knowing how to do it, and getting gouged by accountants who unfortunately had to learn how to do it, because this isn't easy, and had to spend hours and hours in Excel trying to do the best they could. So that's why we've been amending thousands and thousands of people's returns just to get it right. A lot of people overpaid their taxes in 2017, 18, 19. You have 3 years to get that money back if you've overpaid and you're owed money by the IRS. So it's worth taking a look into. But yeah, I totally agree. If it was made by someone who's trying to track cryptocurrencies, I mean, that the NSA or something, that it wouldn't surprise me at all.
Ooh, me.
Because throwing conspiracy theories, I don't know.
Hey, well, I talk about that on this channel a lot, about that kind of thing. It's not just you talking. Most of the most intelligent people in this space and the most experienced in this space that I talk to, at some point, that question mark, I mean, they've brought that up, that it had to be created by someone who knew that ultimately it would make tracking down criminals and things like that easier.
Yeah, which I love. I mean, look, yeah, and track money transferred around for terrorism or random things like that.
And
Like,
you know what another thought
great.
I've had is, and I don't mean to take you off on this journey, but you know what another thought I've had is, think about if the United States government or some of these countries, when they start issuing their own digital assets, think about a scenario where they're asking you to turn in your cash, and if you don't turn in your cash becomes worthless. Think about the criminals out there that would be put in a situation where they either go into the system or what they have accumulated becomes worthless.
Yeah, I mean, you can see case studies about that. You know, I lived over in Zimbabwe in 2013 and 2012 for a few months, and they had, you know, thousands of percent inflation every month. Like every month, all your cash literally basically became worthless. It became worth 1/100th what it was worth at the beginning of the month. And what does that do? It forces you to go out and spend every bit of cash you have every day, which just reinforces the cycle. And, you know, any country can do that. They could just, how did that happen? They just printed way more of the currency than they should have. The central bank did. And all of a sudden it wasn't backed by anything. And we already know, you know, the US dollar, nothing is on the gold standard. So to me, the investment hypothesis of Bitcoin as digital gold just makes perfect sense to me. Like digital, you know, gold is worth 10, 11, 12 trillion dollars now. Bitcoin and crypto are worth a fraction of that. Yet gold is way more expensive to transport, to store, to protect. You know, Bitcoin, you can be hacked, but if you have good security, if you have everything buttoned up tight, you know, you can protect yourself and you can walk around with a lot of money just in numbers in your head. You know, I know it's cliche to say, but compared to gold, now I know you can say Bitcoin doesn't produce a yield, even though you actually could if you're lending it out, and, you know, Tezos has staking and on.
Right.
But yeah, that hypothesis makes a lot of sense. Actually, can I show one more thing?
Yep.
Di, about our platform. So like I said, there's different accounting methods. So FIFO means first in, first out. So it's like if you bought Bitcoin 3 times, then you sold it once. Let's say you bought 1 each time, you sold 1. FIFO is going to calculate your gains and losses on your first purchase. And LIFO means last in, first out. It's going to calculate it on your last purchase. And so you can see this data set. The client in 2020 so far has about 7,800 in gains, mostly long-term gains. So long-term gains aren't taxed at too high of a rate, like 15%. But with our minimization algorithm, and what that does, it's just the same as FIFO or LIFO, but instead of always doing the oldest one or the newest one, it looks at all your purchases, and with a really volatile asset that's quite meaningful, and it figures out which one you could sell to minimize taxes in real time. Before you make a trade, you could actually check this, and you could see, well, look, the gains went from $8,000 to a $500 loss. And that's why our software is so unique. Like a lot of people say, hey, why do you cost more than whatever other company, or why do you cost, you know, why isn't it free? And we're always like, well, look, we're teaching you personal finance. You know, we have real accountants here fixing all your work, checking for missing cost basis. We have to pay our team for their time, but our minimization algorithm and helping you find any data errors more than pays for itself. You know, we're priding ourselves on creating value for our customers. And just like you said, teaching people about investing in a retirement asset can save them 20, 30%, thousands of dollars. You know, if you charge a little bit of money for that, that's a win-win in my opinion. That's fair. And, you know, you want everyone's incentives to be aligned. So I just wanted to give you that example.
Right.
And this is only through the first 2 months of the year of trading with my data set. FIFO and then LIFO, let's see. And the system does all this automatically. So FIFO, you have a $600 gain, and the minimization found even more losses, and it prioritizes losses first. So the way this works is if you have a loss and a gain, you net them out. And so this person has a net loss of 500 right now. So they literally owe no taxes until they go positive on their gains. And, you know, you can change your tax and filing details. You change which state you're in, and it will automatically, you know, you ask me, what's the short-term capital gain rate on that? What's the long-term capital gain rate on that? Well, our system will actually tell you that exact number for wherever you live. So you could just be like, da-da, and it will tell you, you go here, it recalculates your tax liability. And then you could actually go here into settings, and it will show you exactly what your rates are, tax details. All right, so you're in Georgia, 21% your short-term capital gain rate, 3% long-term capital gains. Why is that? Because we put in 40,000 as the income, and the crypto gains and losses weren't too high. But that's what our system does basically. And you can put in wherever you live, whatever year, and it will tell you exactly what your tax rates are.
Man.
In fact, before you even make a trade. So just so you know, that
You
there's a
guys
lot
have
of functionality here.
You've thought of everything. And you're also, you know what else you're doing is you're giving me bad flashbacks. I majored in finance at Auburn University, and so I had to take,
Tigers.
I think I had to take at least 2 or 3 accounting courses, and I hated it so bad. The FIFO, LIFO, and all that. I survived, but wow, it was tough. in business school, the tax, the accounting is the toughest part of the business school. That and business statistics, I hated that too.
Yeah, I mean, I hear that all. Those were the classes I TA'd for when I was in business school and in college. Was statistics, accounting. We're a bunch of accounting nerds who just think it's like a fun puzzle to figure out. So
yeah,
that's why it's all about specialization. Find someone who loves doing what you don't like to do.
Yeah,
and,
wow. This is genius what you've created. Is that all that you wanted to show? Because I'm going to wind it down if it is. If you've shown the gist of
that
what
was
you
everything.
got.
Unless you have any other questions,
No.
Like I said, if anyone follows up with any questions, I'm happy to have an AMA or answer them, or just type out an email response, or come back on and show other features. And we have a lot of users, and they submit requests for different features, and that's how we added these things here. And we're always open to, hey, you want a mock trade tool, you want something else, whatever you need. We're a small dynamic team, but we love the crypto community. We're just trying to add value here. Like, we've been working a lot with the DeFi and lending communities to come up with tools to help them figure out the taxation, because that's quite complicated when you're giving collateral, getting another asset, lending it out, investing it. So for those of you who are already TokenTax customers, feel free to ask for whatever features you want. And when it's not tax season, we'd love to chat with you and hear your feedback and what we can do to make things more useful for you, for tracking your taxes, for just investing in crypto. We want to make it as easy as possible.
And I want to tell everybody that's listening, I want to tell you, in the description of all of my videos, Zach is giving you a 10% discount. He gave me a coupon code, so you get a 10% discount. There's a description of his TokenTax, as well as this video I'm going to put down there in the description as well, so that anybody that's wanting to take a closer look will be able to watch this video, and then they'll have the coupon code right there, and they can go and get with you guys. Now, Zach, every time I do a video, I finish it by giving them a disclaimer that I'm the digital asset investor. I'm not an investment advisor. I'm not an accountant. And this is for entertainment purposes only, and to subscribe and hit the like button. So if you have any disclaimers that you need to say, then you can say those now.
Yeah. In the same vein, consult a tax professional. This is not meant to be tax advice for your specific situation. If you have any particular questions, we have CPAs, like I said, or attorneys in-house. We can talk to you. Should you create a business for your trading, for your investing, all these types of questions. Should you file with this accounting method? What's the proper accounting for staking, for this, for that? We're happy to have conversations like that, but none of this is meant to be official tax advice. And thank you for adding that in.
Okay. Great. Well, I really appreciate it. I'm going to end the video here, but I'm going to stay on the line and ask you a couple of questions, okay?
Perfect.